You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of education, a little bit, a dash of unusual activity, some strategy. We talk about what's trading. We answer your questions. Every once in a while, we bring in a fun guest as well. You stir all that together, and you get the heady distillation that is the Option Block. My name is Mark Longo, beaming to you from the Options Insider Radio Studios here in lovely and still wintry, despite what the groundhog said, Chicago, Illinois, the options capital of the known world. And here amidst the options mecca, the options capital, we produce a wide array of fine options content for your listening and indeed your reading pleasure. The best place to find all of that, of course, and I remind you again, completely free of charge, theoptionsinsider.com. That's, of course, you can find all of our alerts, activity, breaking news, all that fun stuff. And then while you're there, make sure, after you've done all your reading and all your other fun stuff, click on that top left corner of the page, the Insider Radio Network tab, and your radio adventure has begun. You can go all 13 episodes, 9 years, 13 shows, I should say, 9 years, thousands of episodes of options content at your disposal, listeners. Of course, all the major platforms in there as well, iTunes, TuneIn, Stitcher, etc., and so on and so forth. Even the app stores. You literally cannot escape us, listeners. We're even in the app stores, iOS, Android, even the Amazon Fire Store. I think the only place you can escape us at this point is the Windows Mobile Store. I'm not sure what else is really on there, but that's kind of about it. So if you're a Windows Mobile fan and you hate our content, you're in luck. Everyone else, you pretty much cannot escape us. We are inescapable here on the old Option Block program. And of course, while you're listening, while you're downloading, while you're streaming, while you're reading, we love to hear from you guys. Send us your questions, your comments, your insights, your snipes at Uncle Mike or the Rock Lobster. We love to hear all of them here on the old program. Who knows? If they're good, maybe we'll read them here and answer them and discuss them on the old program. And joining me on the old program today, starting off, let's go in order of proximity, starting off with the man beaming in from that lovely little provincial hamlet known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program on this fine Thursday, sir.
Love it here in the provincial hamlet.
It is quite provincial, nice, quite the nice hamlet. It's a beautiful, lovely place. I recommend listeners to head on out there. You can literally double the visitorship over there at St. Charles if two of you head out there. So it'll be a big year for St. Charles, and we'll get our nice referral fee. Hit the old Option Block that they've owed us for many years now. Also joining us from a little bit farther afield and weeping and bemoaning his lack of a functional ice rink, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. Rock Lobster, how are things in the land of Maine? And give us an update on the ever-melting ice rink.
It is melting into puddledom. There is just a little bit of ice underneath the water, but hopefully it'll get nice and cold and refreeze. But right now it's a puddle. Maine is a puddle. It's mud season and it's the middle of February. Actually, it's not even the middle of February. It's the beginning of February. There are no little ice fishing huts on any rivers, at least around here right now, because they would be in the water.
Well, you moved to Maine really for two reasons. One is, of course, to escape all civilization and the reach of human law enforcement, which we know you did, and also B, to build ice rinks. And clearly the latter not really living up to its potential right now, sir.
And it's very sad. It's sad, but it is true. It is, I guess, a little north. They're having a little bit better time of it, but we're wet.
A little
it's
north
wet and rainy.
A little north. So Canada, basically. You have to go all the way to Canada to get ice.
No, that's what they would call the county rustic, where it is the coldness here is nothing compared to the coldness there. Oh, they laugh at our coldness.
Those are northern Mainers. That's where those are the crazy ones. We southern Mainers are civilized by comparison. We wear shoes.
They actually had to import Swedes and Norwegians and stuff for northern Maine because it was so cold. Like the average person just couldn't handle it up there.
It's the Arctic Circle of New England. Very little known listeners, but very, very Arctic up there. And joining us, getting a little bit closer to home, fill in our Thursday guest spot this week. He's been on before. You may remember his appearances. He is the major domo of all things business development, as well as a lot of other fun things over there in the land of NADEX, Mr. Dan Cook. Dan, welcome back to the Option Block program, sir.
It is great to be back. Looking forward to the show today.
Should be a fun one. A little bit to talk about, I think. So without further ado, let's get rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Like the man said, this is the portion of the show we break down what was moving, what was shaking, rocking, rolling, hither and yon over there in the old markets today, and it was an interesting one today. If you just look at the end of the day numbers, again, looks like not much really happening, kind of unched on most of their major indices. That kind of belies a pretty hefty range across the broad market. S&P's had about a 27 handle range intraday, which we're kind of getting used to that at this point. We kind of just shrugged that off. Those 1% moves up and down is kind of like clockwork at this point. We opened right around 1912 or so, got down right about to that psychologically important 1900 level, then bounced off, got all the way up back to 1927 before we're hovering right around the 1916 or mid-teens range right now here at the end of the session. So just after hour, just close to close, it kind of belies the activity we've been seeing all day. And we have some names popping off here in the after hours and stuff to talk about from earlier this week. But before we get to all of that, since he is our guest, I will give him pride of place. Mr. Cook, I'm guessing this, just going out on a limb here right now, I'm guessing this was a pretty active week over there in the land of NADEX. What was really firing off over there at NADEX this week? What caught your eye?
Absolutely, very much so. Actually, it's been a pretty big 2016 all around with the activity we've had. I think everybody's finally happy to see the markets start to move, and we've seen a big uptake actually in our spread contracts as well, particularly on the indices. So the contract based on the E-mini S&P or the Nasdaq and the Dow have really been big movers for us. And again, I think people with this volatility are looking to find a place where they can get that opportunity, but without getting their face ripped off if they were trading the underlying, and all of a sudden there's that huge move that they just didn't foresee. And so we're seeing a lot of activity, both in binary options, but a big uptake in spreads as well on the indices.
And if you guys aren't familiar with NADEX listeners, of course, surf on over to nadex.com to learn more. But you guys are kind of uniquely situated to take advantage of some of this market volatility. I'm not sure if you know this, Dan, but a little product out there called crude oil has kind of been moving a little bit of late. And you guys offer a few products in that realm, do you not?
We absolutely do, and it's really been it's been a great contract for us, particularly like you said, what we've seen. I mean, it's kind of been down in those ranges, and I was just looking at my chart here. We're seeing some pretty big moves in that, and for a lot of people, and I've talked to a lot of our members, it's some of these people either wanted to trade crude contracts, on the underlying market, the futures contract, and others have, but they just don't have the capital when the markets are moving like this. To put up $4,000 or $5,000 in margin and then trade it at $1,000 a point. It's just ridiculous. So what a lot of our members I've been hearing are coming because they can come here, basically trade an option type of contract on that, put up a small amount of money, not get killed if it goes against them. They're all limited risk, so there's no margin calls. I mean, it's basically like it's basically a call spread. And so from a lot of the members I've been talking to, particularly in oil being one, and also in the indices, that's one of the things that they're really gravitating towards, is that they can really get the effectiveness of leverage, but without ever having to worry about that margin call, or maybe calling their significant other and telling them the kids aren't going to college because they thought oil was going to to 35 from 33, and now it's down at 26.
That's one of the things I like about the stuff you guys have rolling over there, because we spend a lot of time on this program and others on the network explaining the nuances and the vagaries of options and the delta and the gamma and the theta and the vega and the implied vol and all the other things that you kind of have to wrap your head around to really understand that. And still, sometimes you can understand all that and look at an at-the-money option and what is trading and what it's pricing at, and kind of scratch your head and be like, why is it priced here? That doesn't really make a heck of a lot of sense. I think it should be here or something else like that. Whereas the binaries, like you said, kind of straightforward. You think crude's going to be above or beyond or above or below X price by this date? Yes or no? And the price breaks down to essentially an inherent probability. If it's 65, the market's pricing in a 65% price or a 65% probability that event will come to pass. I like the inherent straightforwardness. I like the inherent simplicity. We go back and forth here about, delta. It's used a lot as a probability of expiring in the money, but that's not really what the definition is, and it's not really appropriate to apply it there, even though it kind of gets conflated a lot as that. So you can't really make that same intuitive, obvious leap with options prices. But with binaries, it's kind of all right there, which is kind of nice for the basic retail guy who's coming over for the first time to say, hey, what do you think's going to happen in crude? Okay, they're pricing in 65% probability. Cool, go for it. I think that's for you guys, at least in this environment, that might be a nice advantage to have in your back pocket.
Yeah, it certainly is, and for somebody, we have a lot of people that have been trading in various markets and options for years and using them as a complement to what they're currently doing in situations, but particularly for somebody who might be interested in options but is kind of intimidated by the whole process. I mean, the same Greeks really apply to binary options, but the nice thing is the price you're looking at is exactly what you said. It's basically the market's view of the probability of that event happening. Another nice thing is, and we see a lot of people, particularly in these markets, just taking both sides. Very easy to do. If you doesn't matter if the market goes up, it's or down. They're just taking both sides of the trade, just expecting it to move. But the pricing is so straightforward. It's a great first step if you're interested into options, because you can start to learn these concepts and how they impact them. But you don't have to get it over your head right away. It's a very easy first step.
All right, I'll stop probing you now. I'll give you a chance to think. But I want you to think, because coming up in the option block, I'm going to toss it to you again. I want you to think of some interesting crude oil activity that's been catching your eye over the course of the week, and we'll talk about it a little bit later in the old unusual activity block, a.k.a. the option block. So there you go. You are forewarned and indeed forearmed as we move on to some of our other compatriots. Let's go back to that provincial hamlet known as St. Charles, Illinois. Uncle Mike, a lot of things popping off in the old marketplace today. Your beloved Apple still below the century mark. Google or / Alphabet taking it on the chin a bit after all the recent moves out there, and a lot of other fun stuff. Of course, crude's been rocking and rolling of late, so I know a lot of the products you're interested in have been moving. What's been catching your eye today as well as earlier this week since our last show?
Well, let's not forget there's gold in them there hills.
Oh, I forgot you like the shiny stuff too.
That's right. Gold has had probably the quietest near 10% rally since mid-December that I've ever seen in the product. No one's talking about it. It just seems to be kind of an afterthought, but it's very quietly gone up nearly 10%. So I think that is this the time to be buying back into gold? Well, it still has a long way to go to get back to where it was. But I have to say, this is something to where even though we've had a position in this for quite a while, and we've had put options hedging it the whole way down, but I have to say this is definitely making a case for the shiny things. Thus far this year, we took the puts off on December 31st, and we're just been working with a stop loss since then because I just assumed we'd get stopped out at some point, but the run keeps continuing, and it has been joyous thus far. So with gold, I think that's probably the big thing that's catching my eye at this point. Apple is still under the century mark. I think that if you are an Apple bull, might not be a bad time to start scaling into it. I would not take a full position on it as of yet, because once again, the way with which Apple, I think, is going to get back up to the 130 mark is going to be through some type of innovation, and they still don't have that yet. But they are a solid company with good sales and good products and good fundamentals. And I think that warrants a potential scale in to a company as such.
All right, sir. Thank you for that. I like that. Taking the puts off, by the way. That's about as close as you come to flying naked out there, Uncle Mike. You're crazy. You're crazy, man.
Oh, it's crazy.
No puts. I don't know who you are anymore.
I don't know either.
All right. Let's turn our attention. If he could dry his tears for 2 minutes on his very soggy ice rink, Mr. Rock Lobster, what's been catching your eye through your veil of tears in today's and even earlier this week's market activity?
All I would say is the tone in the option pit chat rooms were, let's just say, just annoyed. Like, okay, give me a bear market, give me a bull market, give me something, but this mid-20s VIX market that doesn't go anywhere just sucks. So from a trading point of view, the only thing I did today was like close some things. I opened nothing. So just annoying, aggravated, bored, whatever, the Fed is going to, we have a non-farm payroll tomorrow. I am so tired about the market having to lean on everything. It just is such a pain in the butt. All right. Fed, you guys have already blown it. You've overmanaged everything, whatever. Just take your cookies and go home and say, you know what, we're going to address economic policy next year. But for right now, everything looks fine. You guys just go figure it out. Okay, stop trying to dial it in every month. It's never going to work. So I think they're in love with their own, market moving prognostications. I'm sorry. So it was annoying. It was boring. And I think the market literally is teetering on. You've got massive currency devaluations through either lowering interest rates, negative interest rates like we saw last week in Japan. How ridiculously low can the ECB go? I mean, at some point, and I don't know what that point will be, they have to give up doing what they're trying to do and just, fiscal policy and governments just doing better things are going to help economies grow. And right now the stock market's looking at a Chinese devaluation, which is big. The market looks at all that. It adds a huge layer of instability. And I think so half the market is literally ready to fall off the cliff. And the other half is looking at, I think, all the other fundamentals, which don't look really horrible. I don't know if the market's wildly overvalued now, but if we go into an awful tailspin recession where nobody wants to loan any money anymore, of course, then the market would be. So we're stuck in this, it's not really enough to be a bull because there's really no easy monetary policy, although they've tried just about everything. So the upside feels like it's shut down a little bit, save for a couple of names or stocks in general. But then you always have that kind of gapping yawn on the downside where the instability from currencies and all that stuff is making people nervous. So it's kind of in this sort of, it's in this fugue state. And we're going to be in it for a while. I have no idea. We commented on it a couple of weeks ago. The dark side of volatility has yet to show its head. And I believe it's just going to, the dark side really is it's going to take a while until governments create stable policy again and not keep trying to, nickel and dime and dial everything in. I think it just keeps opening the bottom of the market up. So it's not going to surprise me if we make runs back to 1800 or lower on some, I think the bigger moves they're going to try to do at this point, the worse results they're going to get.
Well, Mr. Rocklaster, if you've been too bored out there to really pay attention, I got something that'll wake you up. We got some earnings coming out after the bell. So right now here, as we're recording, listeners, and going into the close, one of the bigger names reporting today is good old LinkedIn. We talked about them before. One of the former darlings of the Web 2.0 set, perhaps coming on hard times a little bit here. We shall see, but they were this closed right around 192.30, very close to that 192 half strike. They were pricing in about a $22, about 11.5% straddle is what they were pricing in going into the close. This is the name doing about 14,000 contracts a day of late, doing nearly 95,000 today. So a pretty steep day and pretty almost exactly one-to-one calls over puts, so no net bias one way or the other out there. I'm guessing, looking at the numbers right now, that a lot of those people perhaps wishing they had a bit of more of a bias to the downside because they are crushing this thing in the after hours. It's already off 42 handles. Yes, I said the straddle went out at $22, listeners. You almost got a 2x move here on this straddle. So it priced about 11.5% move. They already got 22% here in the after hours. So this thing is just taking it on the chin. We'll keep an eye on this one to see how things, actually it's a little bit worse. I just refreshed. Now it's down 24% or 46 handles. So the bad story keeps getting worse. I'm guessing, I'm just going out on a limb and saying the market not maybe liking the news coming out of LinkedIn here right now. Perhaps all the move to mobile and some of their confusing content strategies and other things they're doing there at LinkedIn not really driving the views that people want. LinkedIn is one of those weird properties. At the end of the day, people go to it because you kind of have to be a part of it to look people up. You don't spend a lot of time on it. And I think they're trying to fix that, making it a content destination and things like that. But clearly not resonating out there. Mr. Rock Lobster, was LinkedIn catching anybody's eye in the chat room today?
It was right at the end. I think that there was a client that was interested in kind of selling some upside butterflies, basically for credits. So he'll collect his credit and be happy. And but yeah, the downside of just about anything lately is I have just not a lot of interest in selling too much of it.
Yeah, it's kind of hard to dive in and blast away at a lot of premium given the aggressive moves we're seeing out here. And certainly if that was your bent, you're probably pretty happy right now looking at these numbers here in LinkedIn. That straddle was just the beginning part. We're already at 2x and beyond here, listeners. So interesting stuff. We'll see if that move holds up or indeed gets worse as we continue on with the show right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, you know that funky tune means it's time once again for the Odd Block, the portion of the show where we break down the weird, just downright sometimes bizarre paper that's catching our eye out here on the old street today. And one of the nice things that I like about having Dan on the show is we get to expand our horizons a little bit, not just dive deep into the realm of all things equity and index options and unusual activity, but they have their fingers on the pulse over there at NADEX on what's going on, some of the other products, and particularly some of the more interesting and exotic use cases for things like the indices and crude and gold and pretty much everything else you guys list over there, Mr. Cook. So we were talking crude before. Crude has been rocking and rolling pretty much all week, but primarily a lot yesterday. Big gap up on Wednesday, and we're seeing a lot of interest as a result. So what have you guys been seeing in crude, and any interesting activity popping on your eye? Are a lot of people buying binaries? Are they shorting binaries at a particular level? Are they using the old binary as a strangle versus options premium? What are you seeing out there?
On the binary side, and it's kind of interesting because typically we'll see similar strategies across the two different type of contracts, binaries and spreads. One's basically an all or nothing. It's binary. The other one is a variable. It's more like trading a call or a put. On the binary side, we're seeing a lot of strangles. Just as the market's moving, it's like nobody wants to pick a direction. They're just thinking it's going to move. Whereas on the spreads, it's been a lot of just directional plays. And one thing I'll comment on, I can only see one side of the trade. And a lot of times when they're using their spreads for those traders, they're basically using them as a hedge or an insurance policy. One thing I did see earlier today when we kind of got back down around, earlier in the week, we kind of hit off those lows, kind of peeked through them for a little bit. Here recently, we started to see more of just a directional play to the upside. And that was a little bit different because typically we'll see the same thing where people are saying, "Hey, it's just really going to move," and they'll try to take both sides of the trade, more in line like with a butterfly. But it's really been very directional. Mark, you and I have talked before on the from an actual volume perspective, binaries, particularly in markets that are really moving, you can get in really cheap and still have a lot of upside. It's really all about risk-reward ratio. Of course, neither contract you ever get stopped out. You've got the protection of really a long option. But typically, we'd see the same activity we were in both spreads, but a lot higher in the binary options. typically spreads would be around 7 to 8% of the total volume for that contract. Right now, the spreads are doing about 25 to 30%. So we're actually seeing some people come in a bit bigger size. Looks like directional plays. Again, I don't know if that's the direction they're picking or if they're hedging risk from the underlying market, but it's a lot more directional bias, it appears to be, in the spreads.
Does that indicate to you perhaps maybe a more sophisticated clientele coming in, the guys who use the spreads, or is that just, like you said, more of a directional bias, or maybe a little bit of both?
We're seeing a bit of both. We've actually launched, we've always been known as a binary option exchange, but we launched a bunch of education on our spreads and changed the crazy name from bull spreads to just spreads, which I know you were after for about 3 years.
I was a big advocate of that many years ago. I'm glad to see it's finally come to pass.
Yeah, it only took me, let's see, I created the spreads in 2009, 2 years before I worked for NADEX, and they called them bull spreads. So since 2009, it only took me till 2015 to get them renamed. That's how much respect I have over here. But just I think getting that information out, we're seeing a more sophisticated, I don't want to say more sophisticated because we have a lot of, people that are very good in the binaries, but people that have definitely been trading the underlying markets are still trading things like the ES, CL, those big markets where they've got some risk, and we're seeing them, do it in some pretty good size. And so it's really getting a lot of attention on those contracts.
Well, cool. Check it out, listeners at nadex.com. And before we'll wrap up here on the crude, Mr. Cook, but I'm going to give you another homework assignment for later on in the show. We're going to talk a bit about non-farms at the end of the show. So see if you can source out and sniff up some interesting activity over there, because you guys actually have a non-farms contract, which is kind of interesting. And we'll get to that in the Around the Block. But now it's time for us to turn our attentions back towards some of the other players here in the old odd block, kicking things off in a somewhat related name, dealing with commodities at least. This is an ETF on the S&P Spider ETF on metals and mining, so they dig up some of the aforementioned commodities. Ticker symbol, of course, XME, closing today right around $15 even, up about 5% or so today. And it looks like someone, this is a name doing about 6,000 contracts, doing a whopping 150,000 contracts today. So a little bit of paper, a little bit of volume going up out here in good old XME today, like orders of magnitude more than they traditionally put up out here. And what caught our eye out here, looks like a pretty sizable roll, starting off with the Feb 15 half calls. First started going up 13,000 times over the Feb weekly 14 half calls, going up again about 13,000 times. Initially, that was what we saw. It looks like a paper kind of buying the longer term Feb, selling the shorter term Feb. As the day went on, that size increased. A bit of a ratio here, total of 17,000 on the weeklies expiring on the 12th. So going out quite soon, listeners. Those going up about 17,000 times total, whereas the regular Feb 15 half calls going up nearly 48,000 times. 20,000 open interest on the weeklies, 0 on the Febs. So clearly a bit of a roll. Our friend here not wanting the party to continue clearly, but not looking really to give himself a lot more time here at all. He's just rolling out another little bit of time pretty much, which is kind of interesting. And clearly he expects the upside party to continue, which you've seen pretty much throughout the second half of January here into February here in good old XME. And he wants it to happen in the next couple of weeks. And he's putting some size money where his mouth is that this is probably going to happen. Again, also the increasing of the size on the second leg, typically an indicator that we're seeing someone sitting with a little bit of house money, putting that to work on the second leg, saying if it worked well once, why wouldn't it work well again for about 2x the size? So seeing some of that. Also saw a pretty sizable, looks like a put vertical out here in Feb to the tune of about 25,000 of the Feb 14-13 put spread going up on no open interest. So perhaps our friend taking a bit of a financing tip here as well. Perhaps even not just rolling, but legging into a bullish risk reversal. Those two trades combined for pretty much the lion's share of that massive spike of paper we saw going up out here today. Mr. Rock Lobster, a lot to carve off here. First, the size house money roll, and then what do you make about these downside puts here?
The downside puts. What the heck? Oh, that's right. Sorry. I just thought the way that they were trading the call spread, they were all traded at two totally different times. I thought the puts could be just a look. I was just looking at that. Those went up way at the end of the day, so I didn't see the puts. Let's see, those are Feb ordinary. Let's check out that real fast. I just think it's a house money roll for the calls. The guy hit a home run and he's just going for it. Although I've never understood why you roll just to 1 week later, but
the very immediate roll.
That is, it's all going to happen next week, which, you know, I don't know what's going on. I was just in our little, some of our education rooms. There is some considerable short interest in a lot of these producers. So it could be a play on a short squeeze pretty easily. I mean, when there's substantial short interest in some of this stuff. So they could be looking at it that way. The put spread is, I'm a little inconclusive on the put spread. Again, it looks kind of bullish.
Yeah, it's out of sequence. It's kind of, the prices are kind of weird.
Yeah, it's a little wacky. Not quite sure what to make of the put spread, but
it's like they're lifting offers on the 13 puts and then going through the offer on the 14 puts. So,
yeah, I mean,
something's out of sequence there.
It could be it could be a two-saw stupid, but you know, it doesn't.
little small size for two-saw though.
Yeah, I know. It happened, you know, that was a much different trade. I'm not quite sure against that. I would like to see on time and sales if there's any stock against that. But the put spread, I think I can't quite figure that one out. But the calls look just, you know, like somebody rolled up. The only thing that could possibly, you know, be different on the call spread is, and I've seen this trade go up a few times, you know, they sell the near term and they buy the backs for, they try to put the trade on for a net credit. And if the front month calls go out worthless, they keep the back month calls for basically for free, and then they get a free shot. So it's a bit of a fade on the rally type trade. So tomorrow I'll just see what the open interest, if there's a big open interest change in the Feb 12 cycle, which I think there will be. And just somebody's taking their money and going. Then they're doubling their bet.
I prefer the narrative that this guy rolled the calls and he's swinging for the fences on the upside, and then he waited to the end of the day and he panicked and he came out and bought a downside put stupid just in case. I like that narrative better. That's fantastic, because that's about what we've seen so often in the odd block is nonsense paper like that. So that would really make my day if that was indeed the case.
And huge paper. It's not even nonsense on small paper.
No,
it's nonsense on gigantic.
Size nonsense. A great title for the show. Size nonsense.
If you're going to do something stupid, do it big.
Go stupid or indeed go home, or perhaps do both.
Yeah, but I think he's laughing all the way to the bank on the call side.
At least on the call side. The puts, maybe not so much. But we've talked about stupids before. We may have another question about following up with those later. So we maybe get back into the stupid debate. I knew it wouldn't go away, and I think it may rear its ugly head yet again. But instead, let's move on to our next friend. Staying in Uncle Mike's wheelhouse, this is the shiny stuff yet again. The Market Vectors Gold Miners ETF, ticker symbol GDX. GoodX, closing today $16.50. Excuse me, 15 cents, up about 80 cents or about 5% on the day. This is the name that does about 60,000 contracts a day. So this one's been lighting it up of late, going back to what Uncle Mike was saying before about gold having some activity of late. Today, doing a fair bit more than that, doing 335,000 contracts out there. So quite a bit of it, and a good chunk, about nearly 50,000 coming in this one mega swing for the fences to the upside. We saw paper coming in and just straight up gobbling the June 22 calls up for 32 cents, going up in one mega block. 40,000 times. That's whoever can take one of those down is just that's a size facilitation, shall we say. Oh, 40,000, no problem. Where do you want us to put it up for you? Oh, no problem. We'll eat all that. No problem. I do see like an 8,000 and a 6,000 lot of the 19s and the 17s went up that day too. So maybe that's that desk trying to lay some of that off. But regardless, this one up for size. Total volume on the strike is about 47,000 contracts. So people just lighting it up. Didn't see anything else really. I mean, that sold last might indicate something else going up with this, but we didn't see any other stock going up with this. So this appears to be what it looks like on the surface, which is just a straight up swing for the fences here. June 22, that's an aggressive strike. Looking back here, you got to go all the way back to the heady days of May of last year to even get within a whiff of that strike. They got about 21 and a quarter up there. It was actually a year ago where they broke through it back in February. So you got to go all the way back a year to have this strike be relevant. Our friend here saying, I'm giving it till June, and I'm putting a lot of my money where my mouth is. Mr. Rock Lobster, what's your take here? Size upside here in all the upside here in GDX.
I thought that was a pretty massive purchase.
A wee bit.
And like I said, I'm either the case for one of the great short squeezes ever in the metals and mining sector is about to happen, or somebody just took all their money and chucked it out the window. I'm not quite sure which, but it feels like we could be setting up for some kind of squeeze in here. If there's like a rush to gold, or like I said, with all the weird currency stuff, there could be Tucson could be laughing all the way to the bank on this one. And you know how things swing around. So they hated gold for a while, and they could easily love it again. And 22, any fast move in here with gold up another 10, 15 bucks is not that difficult. So at this point, with the way the market, things are being pulled and stretched so easily, normally I would say this has no chance of success, but on this with the squeeze potential, I say let's just say it's, of all the upside calls we've seen purchased, this looks like one with a pretty decent shot.
The Andrew Giovinazzi upside guarantee here on GDX.
Upside guarantee. See, I like the way you morph that into some sort of, strange bastardation of something.
Put that in your newsletter. I'm sure the SEC wouldn't frown upon it. My upside guarantee in the miners and stuff. But all jokes aside, how many indicators do you need? First, you got the looks like size upside going up in the miners. Someone betting on a size short squeeze there. Now you got similar paper in a gold miners ETF, and then to top it all, the icing on the cake, Uncle Mike is puts off in GLD. What more indicators do you need?
Wow, he's puts off. Well, that is that's really it. That's all. I think that's
the icing on the cake right there.
The triumvirate.
Uncle Mike, what do you have to say on this, sir?
Well, I think that in terms of me being puts off, I was actually planning on getting out of gold for a little bit at the beginning of the year and just putting it in order to get out of it. I'm like, well, I'll give GLD another buck or so, and I'll probably get stopped out, but you never know. And it just quietly kept going up. So who am I to argue with that? But with that being said, gold oftentimes goes up in times of uncertainty, not necessarily inflation or deflation. I mean, you could say it's an inflation hedge, but I would say that gold typically has the best results in times of uncertainty, hence the fast rise with which it had around 2009, 2010, that type of thing. When are we printing more money, QE this, QE that? I think that's a lot of evidence of that. So with uncertainty that's going on with this China deflating their currency, with a lot of things that are happening, I think the uncertainty is what could potentially drive gold up, along with the fact that eventually we are going to have inflation again. At least I think so anyway.
Well, that wasn't enough to convince you listeners. We turn our gaze now ever farther afield, but still in the commodity-related realm. Going to finish up here with BHP Biliton Ltd. This is a global resources company engaged in exploring, developing, and producing and processing things like iron ore and the shiny stuff and all kinds of fun stuff out there. Ticker symbol BHP. Closing today about 22.89, up about $1.50 or 7%. So yet another strong upside day out here in this name. This name does about 5,000 contracts a day, doing nearly 50,000 today, nearly 10x. So yet another size day in a metals and mining related name. And what caught our eye out here, you got to turn to the March expiration cycle to find, March and May to find the love here. You saw a bit of a funky one, which is why it fits so well in the odd block. Started off with about 6,250 of the May 21 puts going up, paper buy-in with about 5,212 of the March 25 calls also going up, paper buy-in for $1.90, 86 cents respectively. So a bit of a, I guess you can call it a time strangle, time stupid, depending on which way you want to go. Puts and calls, so more on the strangle than the stupid side. As the day went on, that size increased to the tune of nearly 12,000 on the March 25 calls, and let's pull up the puts. On the May 21 puts, about nearly 10,000. So 2-to-1 calls over puts. Funky structure, no open interest on the puts really to speak of, and not a heck of a lot on the calls really either. So pretty much opening on both. It's been a while, Mr. Rock Lobster, since we've seen a funky time strangle go up here in any name. So this could perhaps feed into our narrative of a big move coming somewhere in the minors. Our friend here in BHP, perhaps a little bit less decisive than the others. He's just buying vol. He's not looking at direction. Our other friends saying upside all day long. But still, something perhaps maybe afoot out there in mining land. Would you concur, sir?
I saw all this paper. I'm like, is somebody on tap to just get their necks squeezed off? I mean, this has every look of a squeezy McCheese sauce type of move in the commodities, and just big dollars buying this stuff. I mean, I don't know what to say. I don't know. I don't want to fade it, the move yet, because those things have been so beaten down, but it does feel like there's, somebody's looking for just a massive rebound here, and in not too distant future. So it's just, hundreds of thousands of contracts went up on all this stuff. So somebody somewhere thinking something's going to happen.
That's pretty much the power for this show every time. Somebody somewhere is thinking something is going to happen. I like it. Very definitive, sir. Let's move on then from the odd block listeners into our definitive block, a.k.a. your block, because it's time to answer some listener mail.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, it's a portion of the show where you guys get to write in questions, comments, insights, jokes, hilarity, all that fun stuff. Easiest place to do it, theoptionsinsider.com. Leave a website comment, use our feedback form. Find us on Twitter, twitter.com/options, or, of course, Facebook, The Options Insider, Stock Twits, Options Insider, or just hit us up, questions@theoptionsinsider.com, just like our first friend did here, Kevin D. Actually, a repeat offender, KDDiddy, who is responsible for kicking off the great stupid debate of a few episodes back, where we went back and forth on the utility of the stupid Uncle Mike coming to their strong defense, me still being in the naysayer column, even though I allowed a few quasi-legitimate use cases for stupid. Still, at the end of the day, I'm on the side of efficiency and minimal strike selection whenever possible. But he goes on to write, hey guys, getting back to the great stupid debate. He still wants to light a fire on us again, I know. I wrote in a few weeks ago regarding the use of a put stupid to hedge a stock 2% below the market. You mentioned there's a better way using position delta. I understand position delta and delta neutral, but sadly, although I've tried it for a couple of weeks, I'm too stupid to figure this out. Is there a formula? Would you explain? Regards, Mr. Not So Smart. Well, don't be so hard on yourself. Mr. Smart last time, Mr. Not So Smart this time. We talked last time about, you want, I believe the question was, you had a strike you couldn't hedge, so you wanted to buy some of the strike above it and some of the strike below it. And we all kind of came in and said, not the best idea. You really want to look at it from a delta perspective at the end of the day. You want to see how many deltas you're actually buying, because that's where your effective hedge is coming in. And also, when you're taking that kind of bifurcated strategy, it's kind of a weird from a portfolio, from a margin, from a execution standpoint, because some of your hedge is going to kick in, but the other part isn't. So it's not the ideal way for it to go. But that said, we said always look at it from a delta perspective, because at the end of the day, that's what you're buying. The more deltas you can get for hedging for the least amount of money possible is kind of the best way to go in that scenario. I think it was it you, Mr. Rock Lobster, who was going on about this notion of position delta?
It's possible. We do so many shows here. I don't remember. I don't usually use the term position delta.
I don't use that term either. That's why I was tossing it to you.
You have a position. It has a delta.
I'm assuming he means just the net delta of the position.
It could be beta weighted to the market, to the SPY or something like that, and you could buy some puts in there in case things get a little uggy. Again, without knowing exactly what the position is or what they're trying to do, all I can do is speculate and guesstimate. So. But the idea of, it's first you have to figure out what the position is going to look like after you buy some puts, how you ratio them and stuff like that, how much you're going to spend. Right now, you're spending significantly more than you normally would. And what do they want to hedge? They want to just stop themselves out. Do they want to have actually extra curvature with more contracts? So it's, without knowing exactly what they want, which I can't quite figure out from his note, it's hard for me to comment. But the delta of the put does really help. So think of it this way. The easy rule is stock is 100 deltas and options are some fraction of that. And you just multiply the number of options times the option delta, and that will somehow should get to the delta of the underlying that you're long. If you want to do 100% hedge, and beneath that, it's some fraction thereof.
Yeah, when I saw that term position delta, I don't really bandy that about, so I'm assuming one of you two guys did. But yeah, I'm assuming he means just like you said, the net delta of his position, in which case it's kind of just delta. Position delta is kind of redundant. But that said, I'm assuming that verbiage sounds like it kind of may have came from Uncle Mike, now that I think about it. Uncle Mike, are you responsible for confusing our friend KDiddy even more?
No, not at all. Not even the least. Just like what Andrew was saying, if you own 100 shares of stock, you own 100 deltas. And if you buy a 50 delta put, it's technically negative 50 deltas because it's a negative delta instrument. So your net position delta or your net delta, whatever way you'd want to look at it, would be 50 deltas on that underlying. So I think that what I would do is look at the overall deltas of the entire position to kind of do what we had talked about. Now, in regard to stupids, what I encourage all listeners to do right now is to write Mark Longo as many questions about stupids as you possibly can. He approved of 3 stupids in this last debate, and he claims that he is a stupid-free trader. However, if we come up with enough scenarios for him, I think we can get up to 10 listeners. So I call on our listeners to write in various stupid scenarios and get Mark Longo to agree with him and jump on the stupid bandwagon.
I defy you to find 10 use cases, legitimate or not, for a stupid. And then we'll get the debate rolling from there. But that would be interesting. 10 stupid use cases. I think it's a tall order, sir. Dan, you missed our great debate. We've had an ongoing debate on this program, prompted by our listeners who like to poke the bear every now and then, about the use case for a stupid, of course, buying 2 calls or buying 2 strikes with puts or more, etc., instead of just buying the one you kind of wanted to begin with. We've gone back and forth. Uncle Mike, I think because he likes the name, really likes to champion them. But you're coming from a little bit different perspective. You're coming from the binary land, where I'm trying to think, there's not really a heck of a use case for buying a binary stupid. I mean, if you think, let's say crude, you think crude's going to be above whatever, $40 a barrel by X date, you just buy that binary. You wouldn't then turn around and also buy the 45 unless you were really indecisive, or for some reason the 45 you thought was just dramatically underpriced, in which case you probably would buy that. You see a lot of this. Is this paper even viable over there on the binaries?
It's well, first of all, I'm really sorry I missed that debate. I'll have to go back and listen to that in the archive because it just sounds fantastic. It is much more difficult.
I warn you, it's a very stupid debate, so just be prepared.
Aptly named. It's very difficult to be overly stupid with binaries. They're a very simple instrument. And typically just the way the market is, I mean, you can see some strange stuff, but not nearly what you'd see in a lot of other markets where people are just kind of getting themselves in trouble. The one big thing on a binary that really to me is stupid is somebody coming in and in all trading, just taking up too much of their account on one trade. But with a binary, I come in and I see people buying at 98. When your maximum value is 100, or they're selling at 2 with a maximum of 0, by the time you pay a 90 cent exchange fee on that, and then if it expires in your favor at 100, you pay another 90 cent exchange fee. You've made 20 cents, but taken on $98 risk. That to me is binary stupid, because a lot of people do, because there's a probability you'll say, oh, well, I'm going to buy this because it's a sure thing. Well, it's really not a sure thing. If you're buying it, there's a bid offer spread. If you're buying it at 98, the true probability is probably somewhere around 94. And so I think with a binary, that's about the only way to be stupid, is when you look at it and go, well, geez, I'm just taking on all risk and I can't make anything.
See, there are stupids even lurking in the land of binaries. Perhaps not the same way we're thinking, listeners, but still interesting stuff. So, Uncle Mike, there you go. You have to update your stupids webinar to include binaries going forward. All right, good stuff, listeners. We'll have to leave it there, unfortunately, as we keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block. Like the name implies, this is the portion of the show where we peer ahead into the misty ether of the future. An attempt to let you know what we're watching, what we're keeping an eye on for, not just for tomorrow, but into the old weekend. Before we do that, one last quick check-in here on our old friend, the bloodletting that is linked in here in the after hours. See if perhaps they've stemmed the hemorrhaging or if it's just getting worse. And it's actually a little bit worse. It's almost off 50 handles now, off about 25% here in the after hours. So seems like premium buying was the order of the day out here in LinkedIn. I'll be curious to look into the results to see exactly why this bloodletting is taking place. But I'm guessing that it probably was some weakness in mobile and some other areas perhaps that's causing some issues. But we'll get to that a little bit. The bloodletting apparently continuing. So all those people who were trading upside up there, and I know there were some buyers lurking there, perhaps a wee bit sad right now. Again, a conversation perhaps getting back to the after hours options trading, but we won't have time for that on this show. If you haven't taken our poll yet, twitter.com/options, weigh in on whether we should be able to trade options after hours or not. I want to hear your thoughts as we move on. Of course, tomorrow on the earnings front, sticking in our neck of the woods, CME reporting tomorrow, so we'll see how good it's been, or perhaps not that good, to be in the crude business and the corn business and the gold business and pretty much every other product under the sun business over the last quarter or so. Of course, the big number coming out tomorrow, and Dan, this is glad why we can get you on the show to actually get some concrete numbers around this, is we have a big number tomorrow. We have non-farms. And Dan, we talked about crude before. We talked a little bit about gold, but you guys have kind of a product on just about everything under the sun over there at NADEX, including the non-farms. You actually have a non-farms contract, which is kind of interesting. Really quick, tell us a little bit about that, and then have you seen anything interesting going on out there that may lead us to lean one way or another regarding the number tomorrow?
Yeah, actually, we do have a contract, and just as clarification, it is a contract based just on what it sounds like. It is on the non-farm number. Will the overall number of new employment be greater than 150,000? Will it be greater than 175,000, 200,000? So there's a whole basically like a string of different strike prices. The strike price, of course, just being what that headline number comes out at. If you think it's going to be over that, you're a buyer. If you think it's going to be at or below, you're a seller. Now, we have that contract. I'll say right front, it's really not the most popular of contracts because it's not a ticking market. It is just a straight event contract with one number, and that's it. So there's not a lot of activity in and out. Where we see a lot of the activity, and I think this goes to the second part of the question, and I'll probably start to see one thing interesting about binaries, and maybe it's to me a bit different than traditional options in a way, is that I haven't seen, even before a pretty big report, the volatility factor within the binaries, which would actually push it closer to 50 rather than higher, like if it was a call, or lower if it was put, or higher if it was put. It'll push it closer to 50, but I don't really see it change a lot. So what's going to happen, and I can say this with a fair amount of certainty because I've watched it month after month after month for several years now, is that about a half an hour before the report, we'll start to see a lot of people come into the market, but they'll be trading the contract. They won't be trading the non-farm contract. They'll be trading the contract that's based on the E-mini S&P, the Dow, the NASDAQ. In a lot of cases, they're just going to be taking both sides of the market, looking either for a big directional move or a whipsaw of some type where they're getting hit on both sides. It wouldn't be really until tomorrow morning where I could see if there's kind of a bias toward one direction or the other. Oftentimes there's not. It's really just a bunch of strangles out there with a few people, basically taking a shot at the direction.
There you go, listeners. Interesting stuff. You don't often get an actual contract that, literally trades on the event itself. So it's kind of always interesting to kind of peer into what's going on. But you're right, it is kind of a one-off event, so it's kind of hard to be back and forth. The probability isn't always changing throughout the day. But that said, it's kind of interesting stuff to see in action. I always put more stake on actual money changing hands and any sort of prognostication or analyst estimate or anything like that, which is why I like to see actual contracts looking at a number like this, because that's real money. So at the end of the day, every study shows that's where the better analysis lies, because it can make you money. So that's where we like to look. So interesting stuff over there. Let's turn our attention back here. Let's see. Let's go in the realm of the stupids, aka Uncle Mike of webinar fame. What do you keep an eye on for the rest of this week into the weekend, sir?
Well, of course, non-farm payroll. And Dan, do you guys have a Super Bowl contract by chance?
I would love that, but I think the CFTC would frown on that a little bit. They didn't let us have political contracts on elections, and I think this would have been a great year for that.
Oh, that would have been awesome. Do the Trump-Rubio spread or something like that.
Yeah, absolutely. It's amazing how accurate actually, because there are different firms that were not in the U.S. that have offered these. They call them predictive markets. It's amazing how accurate the pricing actually works on those political contracts compared to the poll numbers that we see out. And then just like what Mark just said, when people are putting money on it, it's a lot different than just saying, to somebody else, what is that? I don't have any stake in the game. When you got stake in the game, you're going to actually give your real opinion. That is true.
So aside from non-farm tomorrow, there's really not a lot with which I'm watching. I mean, the news numbers and things like that. We continue through earnings season. We had quite a busy week this week in earnings. So just doing what we can and seeing if gold can continue to go on its quiet run. But folks, don't tell anybody.
Get on the note with your gold or whatever you called your webinar there, your 10-year note webinar. Find some rhyme for gold, sir, and you can repurpose that webinar for gold as well. Unless you don't want to do it. You don't want to spread the word about gold. It's kind of the secret, the stealth rally in gold.
Yes.
All right. Turning our attention back to the hinterlands, Mr. Rock Lobster, what's keeping your gaze fixed for the next 24 to 48 hours?
The non-farm payroll, I don't see how any number coming out of there can be good for the market one way or another, just the way the sentiment is. If the euro is becoming the dominant currency, all I know is we're in goofy land. Good non-farm payrolls, then we're going to lift rates, and that will crush things. And then a bad payroll number is then things are gloomy and it'll crush things. So as opposed to the old days where all the news was good, I think all the news right now is bad until whatever this stuff settles down.
All right, and speaking of settling, this show is going to settle out right now. That's all the time we have. But before we go, as always, let me check back in with my cohorts here, my partners in crime, starting with our guest. We'll give him pride of place. Mr. Cook, we talked oil, we talked gold, we talked non-farms, we talked binary spreads, we talked about the one-day potential of election products and sporting products over there at NADEX. What else could possibly be cooking in the land of NADEX.com?
Well, I mentioned earlier we're doing a lot more education on the spreads, and we're actually revamping the whole website. One thing that, along with the name bull spreads that I fought for years to change, was another one that I can claim victory on. We finally have made all of our demo accounts permanent. We used to just have a 2-week demo. So if anybody's interested in it, it's free. It takes like 30 seconds. That was something, though, because I want our traders to be able to try their strategies out in a demo environment. They may or may not work exactly like they did in their live as far as the results. But, you can learn the platform. So that's one thing I'm happy about, because I was resetting a lot of demo accounts uselessly. So there's one more battle that was finally able to claim victory on.
I like that selfishly, because we set up a lot of demo accounts, a lot of different firms all the time, and then we have to go back to them a couple of weeks or a couple months later, and we have to redo them. It's a pain. So thank you for doing that just to make my life a little bit easier. And listeners, you too, surf on over there to nadex.com. You heard them. You get a permanent demo account now, so sign up. You can kick the tires, and then you can keep it open so you can keep trying stuff. And then once you get acclimated to the product, or indeed whatever else you're liking over there, the spreads, a different category, maybe you're the non-farms guy over there, let us know. You can kick the tires over there and try some legit trades. Again, pricing is all pretty much, the probability is all in the price, so nice and straightforward. We kind of like straightforward products here. And unlike pretty much every other binary event or exchange that approaches us here at Insider, and trust me, listeners, we get approached by quite a few. NADEX actually got a U.S. office here. They're legit. They're regulated. They're not going to run for the hills with your money, unlike the people in Croatia and South Africa and everywhere else who reach out to us on an almost daily basis to say how legitimate they are to us. But check it out over there at nadex.com to learn more. And let's turn our attention back one last time to the hinterlands. Mr. Rock Lobster, turn your gaze away from the ice rink. I know it's just too painful. What else is cooking in the land of the pit?
We're having our beginning basic boot camp. Actually, I'm just finishing writing it up with Mark, and it is looking like actually we're happy with it. We've never done a beginning thing before, so if you just want, again, we get a lot of listener mail with basic questions. This is a good way to learn just option basics. So doing, execution platform, basic call and put strategy, why even you use them, stuff like that. Understanding the leverage of options. So I think it looks good, and all of our classes have been very well attended. So on we go.
You guys have never done a beginning class before?
Not like the basic stuff. No.
Really? Wow.
Nope.
No, what's a call? What's a put?
Yeah, we just send people away. We go get that stuff for free on the SIBO, and then come back when you think you know something. So
now you're charging for it. I like it. Spoken like the true capitalist that you are.
Well, they're asking could you do it? And then so when clients ask us to do it, then we'll do it.
There you go. Ask and you shall receive over there in the land of the pit. And last but certainly not least, I've heard a rumor he may indeed be going long. Uncle Mike, what's new in the land of going long, sir?
Oh, plenty new in the land of going long. Going long has actually been good the last couple of weeks, finally. But nonetheless, if you are interested in going long or going short for that matter, Go Long, New Option Strategies for Buy and Hold Investors. The second edition is live on Amazon. Check it out. Also, if you are interested in discussing any of these strategies with which we've gone over today, not to mention the stupid, but any other one you'd like to talk about for financial planning purposes, feel free to give me a call at 312-212-3531 or send me an email at mtusaw@rcmfs.com.
There you go, listener. Surf on over to Amazon, type in TOSAW into the search bar, and you'll find his book. You can spare a nice $2.99 for Uncle Mike. Skip the latte that day. Buy his book. I think you'll be served far better by that than by your dose of caffeine. Get the cheap stuff. Go get cheap coffee at the gas station for 60 cents. Put the rest towards Uncle Mike's book. I think you're going to like it. And on behalf of Dan and the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, and of course for sending in such great questions. We got a ton of them. I hope to get to more of them on the next episode, and we'll see you next time right here on the Option Block. The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.